Welcome back to Alpha Recap. We're wrapping up the market day and breaking down a lot of noise and a few big thematic moves. As always, if you have questions, you can reach us at stockalpha.ai, and later in the show, we'll tell you how to ask them live.
Good to be here. Today's tape was really a tale of two markets. Technology and communications led the way, while cannabis, parts of healthcare, and some corners of crypto lagged. Markets closed, mixed overall, and a few big headlines explain most of the dispersion.
Let's start with the biggest headline. Anthropic raised $30 billion in a Series G at about a $380 billion valuation. That was the story everyone was talking about. It felt like a signal that AI funding is still pouring in.
Exactly. The size of that round was the headline. $30 billion is a scale that forces institutional investors and corporate treasuries to reevaluate. It pushed flows into companies that supply AI training and inference, high bandwidth memory, GPUs, networking hardware, and cloud services.
So, practically speaking, that meant chip suppliers and cloud infrastructure names finished the day up, right? People were rotating into the pick and shovel plays rather than betting everything on a single private company.
Yes, like investors pushed into the broader stack. The logic is simple. If AI models are going to consume orders of magnitude more compute, then suppliers of memory, interconnects, and data center services have more durable revenue linkages. But this also concentrated liquidity into a relatively narrow set of names.
That concentration point mattered. When a few names get big flows, they can outperform wildly while the rest of the market grinds. We heard that today. Big winners in AI-related sectors, wide dispersion elsewhere.
Right? And that gets us to Roku, which was another headline. Roku returned to profitability and issued a bullish revenue guide for 2026. That pushed the communications and media group higher, especially ad tech and streaming infra names.
I love the Roku move. It flipped the narrative for a streamer from growth at all costs to monetization and platform leverage, which is music to advertisers and investors who want to see a path to profit.
It's important because Roku is a proof point. Advertising led streaming can scale once subscriber growth normalizes, provided the ad stack is differentiated. Investors repriced ad tech and some content licensing bets as a result.
Switching gears, utilities and energy had a busy day. There were stories about EV charging momentum, a solar edge tie-up with WeaveGrid, and Lunar Energy raising $102 million. The Department of Energy also framed 26 AI challenges that accelerate plant deployment. That painted a picture of faster grid modernization.
Yes, and the narrative there was that electrification is getting priced earlier. Virtual power plants, home batteries, and storage plays saw interest. At the same time, natural gas and LNG got a bid because data centers are expected to need dispatchable power as AI workloads ramp up.
So the energy story was bifurcated. Renewables and storage for long-term transition winners, and gas and LNG for near-term dispatchability. That felt like investors were trying to have it both ways.
Exactly. One camp is positioning for electrification and resilience, the other is hedging with midstream and gas exposure because for now, those supplies provide firm power on demand when intermittent resources aren't sufficient.
Now, not every sector had a good day. Cannabis got hit by regulatory setbacks in places like New Hampshire and South Dakota, plus falling tax revenue in Colorado. That kept the group under pressure.
Cannabis remains policy sensitive. Even when you get local wins, a zoning fix that saved a bunch of dispensaries in New York, for example, state level defeats and tighter tax receipts make the outlook fragile. That elevates capital costs and consolidation risk for operators.
And healthcare had headlines too. A fresh FDA rejection in the biotech space. That's the kind of event that can stampede sentiment overnight for small-cap drug developers.
Healthcare can be binary. One regulatory decision can reprice a company materially. That's why investors treat smaller biotechs as event driven plays and size positions accordingly or hedge around announcement dates.
Crypto was a mixed bag. Bitcoin revisited recent lows, but there were structural moves like Binance converting $1 billion from its emergency fund into 15,000 Bitcoin. That was a fascinating balance sheet story.
Yes, converting $1 billion into 15,000 Bitcoin tightened available institutional liquidity and signaled confidence in Bitcoin as a reserve asset. But it also concentrated risk. A big sell or custody issue could have outsized market impact. Short term price action was negative, even as institutional custody and tokenization pilots kept the long term story alive.
That felt like more proof that liquidity concentration drives volatility. Big one-off moves can both provide structural support and increase short-term price swings.
Absolutely. Those large moves suck liquidity into specific trades, magnifying outperformance for a narrow set of names while leaving broader indices range bound. That was the day's theme, heavy concentration of capital into a few winners.
Let's make this useful for listeners. What were the practical takeaways and action points you were thinking about as you reviewed the tape?
First, increase tactical exposure to AI infrastructure, but be selective. Rotate modestly into names with clear revenue links to model training and inference, memory suppliers, selected GPU partners, cloud vendors, and interconnect specialists. Prefer diversified baskets or ETFs over single private winners.
Good point. Don't put everything into one private company bet just because the headline is big. Spread it across the supply chain.
Second, position for a pick and shovel energy transition trade. Add exposure to virtual power plant software, proven inverter and battery makers, and transmission upgrades tied to utility capital spending. Keep midstream gas as a tactical hedge for near term dispatch needs.
Third, hedge policy-sensitive sectors. For cannabis and small biotech, use smaller sizes, tight stops, or options around ballot measures and FDA dates. Favor companies with cash and diversified geographies.
Fourth, in crypto and payments, think event driven and volatility strategies. For crypto, longer dated collars or structured products can capture upside while limiting drawdowns. For payments names that miss near term guidance, watch volumes. Durable processing volumes are the bellwether for buying dips.
Finally, avoid binary margin exposure without conviction. Hardware and networking names with recent guidance scares, like the Cisco margin surprise, warranted trimming or hedging until management clarifies the drivers.
Those tactical moves map to a broader strategic takeaway. Markets are being driven by a handful of mega themes: AI and infrastructure, grid modernization, and selective energy transition winners, while headline risk and execution uncertainty keep many sectors stuck.
Okay, quick sector watchlist items to monitor next. Shortlist, what should people keep an eye on?
Technology. Watch Anthropic related supply chain beneficiaries, cloud capital spending, and any bifurcation between consumer AI apps and enterprise deployments. Communications and media. Monitor Roku's ad cadence and telco edge rollouts. Utilities and energy. Track EV charging utilization, VPP contract announcements, and LNG charter developments. Materials and mining. Watch DRC lithium timelines and rare earth deals in Quebec. Cannabis and healthcare. Keep an eye on ballot measures, FDA calendars, and tax revenue reports. Crypto. Follow Binance balance sheet moves, UK tokenization pilots, and institutional custody inflows.
Good checklist. And what are the big risks that could flip today's narrative?
A slowdown in AI funding or higher cost of capital would cool the rally in tech and communications. A big spike in energy prices could reroute capital into energy names and hurt margin sensitive growth sectors. Surprises on regulatory fronts in cannabis or healthcare would magnify volatility. And of course, macro shocks, rate surprises, or geopolitical events remain tail risks that can reallocate capital away from risk assets broadly.
To wrap up, let's give listeners 3 clear takeaways to carry into tomorrow.
One, the market narrowed, big conviction in AI and infrastructure, and that drove disproportionate gains. Two, energy transition stories are being repriced earlier, but you need to balance long-term renewables exposure with short-term gas and LNG hedges. Three, policy and regulatory headlines still create binary outcomes in cannabis and healthcare, so size and hedge those positions.
Perfect. Thanks for running through that. Quick reminder, if you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. We'll see you next time.